Hello and welcome back. Hope you are good, doing well. So we are having euro dollar setup. Euro dollar is just simply setting up for a drop or correction, very much similar like this one, okay, or maybe a bigger one like that. So euro dollar is simply setting up for a pullback. So how far that pullback goes, we'll see. Yeah, so it is simply setting up for a sell opportunity over there. So basically this is a counter trend trade. All right, so the trend is simply was there from this 96 and went all the way up to 113, and the trade is going to be a counter trend trade. So why this is going to be a counter trend trade? So let me just talk about that quickly, why this is going to be a counter trend trade, and the reason why when you are going to get into the sell opportunity on the euro dollar, you should carefully look for that. So if I'm gonna look at the inflation numbers, all right, and the US inflation and the EU inflation. So I'm gonna pull out the EU inflation rate first. All right, so we are having, this is the European inflation, and if I'm gonna pull out the US inflation rate on it, US or YY, this is the US inflation. So there we can see that the inflation in the Europe is still standing at 5.50, while the inflation in the US is below 3. All right, currently 2.97, yeah, or 3. So there is a huge divergence which is just building over there between these two inflation numbers. All right, and if I'm gonna look at the interest rate, all right, so I'm gonna make it side by side, and we'll look at the inflation, the interest rate, EU interest rate, and US interest rate. So we're gonna have this is the core inflation. So this is the US interest rate, which is standing at 5.25. So if I'm gonna pull out the EU interest rate on it, all right, EU interest rate, so we can see that the interest rate in the US is standing at 5.25. Yeah, so there might be another hike in next week on from Fed, all right, and while the interest rate is standing at 4.50, 4, all right, 4 in the Europe. So inflation is significantly falling, headline numbers are still significantly falling, interest rate is above the inflation, while inflation is below the interest rate. But the story in the US is not, in the Europe is not the same. All right, so interest rate is standing at the 4, while the inflation is still above the interest rate. Right there we can see that. So this means that we still may see more hikes from the ECB. May hike in until September. Yeah, so right now they are saying that they're going to be data dependent, but inflation is not falling the way we have seen drop in inflation in the US. So this is a policy divergence which is just appearing over there between the ECB and the US. So inflation is falling in the US, Fed is still hawkish, interest rates are higher than inflation, while this is not the story in the Europe. Okay, and that's causing the euro to get stronger. So means that ECB is still hawkish, and we may still see further hikes from the ECB and hawkish tone from the ECB, which is simply causing the euro to stay strong. So this is the divergence which is building over there, and the trend which started to appear over there on euro from 96 cent and went up to 113. That trend still can remain over there, and this divergence. So we in longer term we will expect, you know, US Fed to cut the interest rate. So this is the longer term picture. You know, because they obviously going to follow the inflation. While this is not the story in the Europe at the moment. In case if inflation falls significantly below the interest rate, then we may expect that the ECB can, you know, change its policy and they can cut the interest rate. So that's not the story in the Europe at the moment, but that story is building over there in the US. Okay, that's a policy divergence which is just happening over there. So that's why this is a trend. This is a trending move over there because policy divergence is appearing over there between the Europe and between the ECB and the Fed. So the trade you're gonna take over there from this gonna be a you know, a trade against the trend. How far that goes, we'll see. So if I'm gonna look at the moving averages, okay, so there we can see that the trend is significantly happening over there for upside. So we are looking for a pullback like that pullback, get back into the moving averages. So that's a bigger daily picture. So if I'm gonna look at the 4-hour time frame, the trade gonna be very much, you know, let me pull out the moving averages. So moving averages gonna be far away. All right, so price will just simply fall back within the moving averages. If I'm gonna open another chart over there on the right side, pound, all right, so pound significantly dropped after the CPI numbers. So we were expecting CPI numbers to drop in the UK. So we have seen drop in the UK, and there we can see that we have already seen a significant sell-off on the pound against the dollar, and the pound is just simply heading towards the 4-hour moving averages. So we are looking for similar kind of move on the euro dollar. Okay, so similar kind of move, just get back. Yeah, it can fall up to 110, and in case if pound keeps falling, all right, keep dragging lower, and in case go all the way up to 126, okay, which is possible because we are having Fed rate decision next week, and if Fed is still going to be very, very aggressive or hawkish, then this is possible. Yeah, but right now we are you know, looking same trade, all right, so this trade, not the whole move. Okay, so this trade on euro dollar. Oh, all right, so hope that makes sense. So if I'm gonna look at the lower time frame, or just simply gonna pull my fib lines first, okay, so that we can understand that up to which level you are looking for target. Right, the target you are looking for very much similar like the pound dollar. So if I'm gonna pull fib lines on pound dollar is already testing 38. Yeah, so 38 on euro dollar going to be somewhere around 111. Yeah, see, currently not looking a big trade, but as long as you pound keep falling, euro dollar can be a good, you know, chart to chase. So this correction, which is just appearing over there, that to break down and continue to keep falling all the way up to 111 first, or in best case scenario all the way up to this previous low. So where are you paying attention? You're simply paying attention at these prices where the price is struggling right now. All right, so if I'm going to go to the lower time frame, you're simply paying attention at these areas, okay, where the price is struggling and price to break through this low. Right, so you're paying attention within these areas, okay, these areas, price to hold that. We were expecting it to hold the 112.50. It went up to 112.4 and then dropped. So these are the areas to look for it to hold. So even you can, you know, grab for a short-term opportunity, very much similar like this. All right, so once price is going to tag that, and you can go after first for a short-term opportunity up to this low by putting stop just behind that. And in case if price fall very, very aggressively below this, like we have seen on the pound dollar, then you are extending your target for the downside. Okay, so we are having this correction. If you are not looking to get into the trade from there, then watch it a strong breakout, very much similar like the pound dollar, and then you are looking to continue to keep dragging more downside. All right, so that makes sense. The first target going to be that 38, going to be 11. 38 retracement, all right? And in case if the daily correction gets bigger, then go all the way up to 19. This is going to be a counter trend trade. Understand that. I have explained that why this is going to be a counter trend trade, guys. All right. Thank you.